Hey guys, Mike here. So another jam-packed video for you, and understand certain things happened this morning after we got the job data, which we'll go into, which I think kind of surprised the market and caused some things to shift around a little bit. You saw certain key levels get broke. You saw something else that's happening to stocks, really the big mega caps too, and I don't think it's a coincidence it's happening as we're going into CPI and FOMC week next week, okay? And it's very important because that's what this whole thing is based off of, this rally and everything going into 2024, okay? So this data really is important. I do want to say this and start off by saying if, you know, your kids are getting that age now, they're going to go to college, you might want to show them this and say, hey, you know, if your goal is to make a lot of money, become an executive at a big company, right? I mean, look at, you know, AMD has been killing it. Look at their CEO, man. This lady right here got awarded 75,000 shares of AMD stock at an average cost of $12.83. She, of course, sold those and ended up taking home net $7.9 million roughly just in those 75,000 shares. I mean, that's amazing, right? I mean, of course, I showed you what the NVIDIA CEO's done. I mean, that he made like 500 mil already, and this ain't nowhere near the amount of shares that they own and stuff, right? I mean, but that's a life-changing money. Not that she needed because she was already rich, but if you want to get rich fast, become the CEO of a major company, okay? You can be done in 5 years max. Now, when it comes to the employment data, whew, I asked if it was going to stay the same at 3.9. No, it came down to 3.7. I mean, just look at that. I mean, if we actually look at this, look at what it was in 07, right? I mean, you talk about normal was 4.2, 4.3 right there. And so, you know, and then you go into 2019, even before we hit 2020, you know, it was 3.5, 3.6. And so, man, I mean, you know, a lot of people are asking, wow, is this the new norm or what is it? And I know people are going to say, you know, look, the job number, always inaccurate, right? I mean, you can see right here, do I expect these to be revised up or down? I'm sure they will be. But this came in hotter than expected, okay? And so what did that do? It shifted the Fed rate cuts and stuff, right? So for this month, it's like a 99% possibility they're not going to do a rate hike. I will be stunned because why? They have bent over backwards to make sure they don't surprise the market. But the big one is March. This is when the first Fed rate cut was supposed to happen. So it's about a 56% chance was going to happen. That dropped to 47% now. So more than likely they stay the same. And let's be real about this. If unemployment stays low like this, okay, and I don't know about you. I mean, I went shopping. The stores are packed out. I mean, they just are. You know, it's just the way it is, right? People are traveling, everything else. I understand. Yes, I get it. There's two different economies. I've been saying it for months and screaming it to the world, right? There is two different economies right now. That's just the way it is. But those people, the middle class and above, are spending, okay? Those are the people that spend the most, and that's who needs to spend to keep the economy going. So whether or not those job data are true or not, I just know those stores are filled up, okay? And so let me know what's happening in your area. Every area is different, but the truth is, you know, the only way the Fed cuts in March is if things are going really bad. You do not cut in a really good economy. You just don't, right? When they started lowering in 2019, if you actually look at the industrial data, manufacturing data, all this other stuff, it wasn't that good. That's what I kept trying to tell everybody. In 2019, this was not a strong economy. It just wasn't. The stock market looked great, but not the economy, all right? And so, you know, that's why they actually really started cutting. And so, you know, it would make no sense to start cutting if things are turning up, you know. And so that's what you got to start tracking new orders, Chicago PMI, that kind of stuff. And you'll kind of see they're actually pointing upwards, which is kind of crazy to think of, right? Because the manufacturing and industrial data, hadn't been that great as it's been coming out. But, you know, and so that's what this whole thing is based off of. That we have this soft landing, that everything's going to be perfect, and the Fed's just going to say, oh, let's just go ahead and just lower rates down, you know. Not unless somehow, you know, maybe if inflation comes back to 2% by then, they go, okay, we're good. Now we'll just cut it. Maybe, you know, it could happen. We'll have to see. And that's why this CPI data coming up next week is extremely important. Okay, it's extremely important. But that's what this whole thing is based off of, is these cuts and not holding it for longer next year. Okay, and I think, like I said, it was 4. Somebody correct me. I think it did change to 3. Somebody even said change to 2. I mean, it's changing all the freaking time, right? And so, you know, we'll have to see. But when you look, what was curious about the day was, one thing to watch out for is HYG. And real quick, guys, if you can go ahead and hit that like button for me, help people find this video, I really appreciate it. And if you want to give me a double help today, you can hit that subscribe button if you like the content, right? So HYG ends up coming out. It's negative for the day, but then you got the Dixie, it's green. The yields you can see are very green. Oil's green, and the indexes are really green. So it was just one of those where it's going to rally. It doesn't matter what the dollar's doing, no matter what the yields doing, doesn't matter if employment's hot or not. They'll still cut even though unemployment's 3.7%, right? And HYG is important to follow because, as one of our members was nice enough to point out to me a long time ago, that it pretty much leads the SPY, right? And so what do you see happening now on the 4-hour? When you look at the RSI, you look at this right here, you go, there's some bearish divergence there, and this is really what you're looking at to say is the bond market buying into this rally and everything and what the narrative is? Because they're the smart money because they deal in risk all day long. Don't forget, the bond market's way bigger than the stock market, and there is no stock market without the bond market. So, and I'll be a little more detailed in that in Saturday's video for you guys. But what I mean by leading the SPY, we'll try to find some examples here, but you can see they pretty much go hand in hand, right? And every once in a while, you'll get that divergence, and the divergence can go on for quite a while. And usually the divergence goes, hey, and you see it both ways, but like right here, you can see HYG is coming down, then going sideways, and the SPY is just rocketing. This is when the SPY went on that crazy rally going into July and stuff. And of course, what ended up happening, we ended up going to a massive sell-off from July through September, right? But HYG was already sitting there kind of giving you a warning sign going, I don't know about this one, guys. And the SPY was just rocketing like crazy and stuff. And we go there, you can see there's another good example of HYG is coming down before the 2022 sell-off. And you can see SPY's like, whatever, we're good. And then, of course, we end up getting a massive sell-off. So that can go on for a while, okay? But it usually just kind of gives you that warning sign. Now, of course, what's the level that broke today? 4,600. We talked about it. We rejected on it about a week ago. Broke above it today. So this would be a key level to watch. Now, you do want at least one, if not two candles fully above this level here. But again, there's all-time highs right there, okay? And you can see that is only 4.6% away. So what does that tell us? One of two things right here. And I'm going to show you in these mega cap stock charts. You've seen it almost in every one of them, right? That you're either going to get the biggest rug pull of your life come next week for sure if CPI comes in hot. And I mean, do we really think the Fed's going to raise next week? I mean, come on. They've been over backwards to not surprise the market. I can't even imagine that, right? And I think it's kind of baked in. I think it's just the CPI is what we're looking at, right? And so if that comes in hot, yeah, you could definitely see a major sell-off, because when you see these charts, you go, oh, okay, I kind of see what he's talking about now. Or a major explosion because of the way these charts are setting up. What I'm expecting from the SPY next week, I'm literally just expecting to kind of stay around that 4,600 area, if not even trade right below it and stuff, just going into Wednesday, Thursday, actually Tuesday, Wednesday, I think it is. And so, when you look at these charts, we'll start off with Tesla because it's always one of the most popular. But you can see very tight range, still just coiling. That's what it's doing. It's in this tight range. It's been coiling now, what seems like for weeks, I swear. And again, when you look at this, it loves those prior day highs, prior day low area. And so, that's where it hung around all day. But you can see all it's doing is wedging within a wedge once again, setting up for another move. Remember, I said this is going to get taken care of next week by FOMC pretty much. And you're going to get to see, again, wedge within a wedge right there. And again, when you look at this, what's it doing? It's just sitting in this tight range, right? Going back all the way to last month. Again, we pan out right here. And we go to the daily, more important. But you can see right there, going back to like November 10th, I think that is, or 13th, just in this little range right here, just coiling up, we're waiting to explode, right? And when we pull out, and we go into a different view, another way to look at this is in a channel, right? So we pull back out. This is Tesla. We take away all the other lines. Here's what you got. Where's it at? It's at the top of this channel now. It's very, like 1% away from the top of this channel, been forming higher and low. And it's either going to break out of this channel or we're going to get a major rug pull and push it back down. If it does break out of this channel, which is going to be key here, it's pretty plain Jane where the levels are, and this is what people are going to be looking for. You're going to end up sitting there around 275 right there. You break that right there, then where are we heading to? We're heading to 300, right? You see that's a very key level. It used to be support, now resistance for quite a while. And then there's the 300, okay? So that's what people are going to be looking for. Again, watch for call sweeps, everything like that. But this is going to resolve itself. Should be next week, okay? Let me know what you think in the bottom, which way it's going. Now, NVIDIA, same thing you're seeing here, right? Here it comes up against what? The October high again. Got rejected. We got right above it, mitigated that fair value gap to the left right there, and then stayed right there at the October high. Okay, and so again, when you start pressing up against it, and if something happens, it's almost like a pressure cooker, right? The bigger the move is going to be. Okay, that, or you just get your rejection, major sell off. We start filling fair value gaps and the RTH gaps below it. All right, but the RSI is staying above the 50. You can tell it's pushing up right there. Interesting call options coming through for it and stuff. So trying to set up for that. Amazon, what you see right here, still sitting against that thing, just tapping right up against this trend line right here. If you look to the left, we're finally setting above July high, just right on it, right? And so again, this is another one setting up for an explosive move if we get the news they want, right? AMD is another one setting in that supply area right there in that range once again. Okay, big move yesterday, slightly green today. Again, big AI pump for this one. And just another one, just like NVIDIA. If NVIDIA erupts, what do you think AMD is going to do? It's not just the CEO's pocketbook that's making more money. Suppose it's going to be AMD. And so this is another one can push way up there, okay? You're looking at 140, 150 for this one. Again, all-time highs aren't that far away, all right? Apple, again, still saying, hey, hold my beer, here we go, right? And so there's all-time highs right there. It is 1.5% away from it. So it's right there. I mean, you could hit it by Monday if it wanted to. And again, just pressing up against all-time high, and above it is no resistance, right? So, we'll see if it consolidates right along there, which is what I'm expecting it to do until we get the data. And if the data comes in bad, that's when you get the explosive move down. That's what happens, right? Now, Meta, like we talked about, I keep that dotted line there for a reason. It's been there for quite a while because what was resistance is support. Nice bounce off of it. I know a lot of people are trying to go along that black line right there and end up getting sold down all the way like 315 right there. But again, nice bounce right here. And there's all-time highs once again. Not that far away. I mean, if we measure this out, it looks like it's a mile, right? But this right here is only 15% away. I mean, you compare that 15%, the entire rally, look, that's 306% move. So 15% is nothing. And I know when you look down at the RSI, you're like, man, but on the weekly, got RSI divergence. Sure do. It's another thing can play out, right? You got to keep your eyes on that one. Be realistic. And right there at the top there, what do you see? Again, look to the left. It's the RTH gap, fair value gap, all kinds of stuff is drawn up there to it. Okay, and again, we expect rejection at that point in time. That's usually what happens when you hit all-time highs. We've seen that on multiple stocks now. But again, Meta's a pretty popular one. And when you look at KRE, this is another one, pushing up to what? It's going up to July highs right there. It's only like 0.5% away, if that, after coming off a monster move. And again, what do you see to the left? A lot of RTH gaps, a lot of fair value gaps right to the left to draw it. It's going to end up hitting that trend line, rejecting it first, but when it breaks above that trend line, it's going to be huge, right? And if it breaks this right here, if they don't raise next week, and you still see these cuts and all this stuff, and people say, man, that's great for regionals, guess what? It's still going to continue to explode higher. That's just the way it is. They keep piling into this one. Now, Palantir, we talked about this trend line. That's why we got it in place. We got the bounce, right? So we have the bounce for now. What I'm interested to see is if it moves up, right? There's a fair value gap right there. End up moving up there, and then maybe from there you get a reaction down. Okay, now of course the market turns bullish when the Fed president comes out and says nothing but the same old stuff. It could keep going, but usually in fair value gaps like that, you'll get a reaction down, and maybe it sets a higher low and then moves higher. But again, we got to bounce off a trend line. So there's a lot of support coming through that area, even though it is an RTH gap. Okay, and so it's going to be interesting. I mean, again, all this is coming into next week. All of it's going to set up for this CPI, and not just headline CPI, right? We're talking about core, and it's still stuck at 4%, right? And they want to get that down. Now, you would think with oil prices being down as low as they've been, that's been a good sign that things are going to come in line. So, but again, we'll go over in Sunday's video setting up for the week. I'll show you all the economic news, which is a boatload coming out, but then what the expectations are for the inflation data and stuff. Okay, so we kind of got the job data behind us. Okay, check. We got that going into the meeting. We can see that right there. And, they're all mixed up, right? Some job data says, oh, well, it's kind of soft, and maybe it is softening up. And another job data, you're like, and then they end up revising the next month. And so it's been very inaccurate. But we'll have to see are they going off that data or not? You would think they would probably be going off that data. So, and again, we'll have to see and stuff. And a lot of this, again, has to do with the strikes being over, I think, for the car manufacturers. Holiday seasonality, where people are hiring a lot of workers, makes for interesting times, to say the least. And you can tell you got a lot of hedge fund managers trying to make up, right? and pile into a lot of stocks, try to push them up to make their returns look better for sure. There's no ifs, ands, or buts about that. So anyway, tomorrow, if you got any questions, put them down in the comments now. I'm putting that one together for Saturday's video, answering your questions, and then Sunday's video will look way more in depth of the charts, get even a bigger view of them and stuff. So we got some pretty good ones and set up stuff for the week. And we still actually got earnings next week, believe it or not. Some big earnings. So anyway, hope you guys got some out of it. Hope you have a great weekend. Please hit that like and subscribe button on your way out, and I will see you tomorrow.